Hello everyone and welcome to my morning report on Monday the 18th of July with me, Richard Perry, market analyst at Handtech Markets. We've got a reasonably positive risk open to trading on Monday morning. You've sort of seen a slight air of positivity really through forex markets, through equity markets as well. The safe haven commodities such as gold and silver are both lower, so you're generally seeing a little bit of a more of a positive risk appetite. That's sort of flowing through with a slight sort of corrective move on the dollar, and also we're seeing the oil price, which is sort of also slightly higher as well. So just generally speaking, relatively positive risk open. Nothing really driving it, to be honest. I mean, the markets have basically looked at this coup, military coup or attempted military coup in Turkey over the weekend, and not really taken much notice of it really. Gold, as I said, is usually a safe haven trade that would benefit on the back of such events, but certainly gold is around about $8-9 down on the day, so not really seeing too much movement there. But certainly I think the dollar as well is reflective of this mildly positive risk appetite, with the commodity currencies all performing decently. And also euro higher on the day, sterling, and specifically the continued correction on the yen, the weakness on the yen. So generally seeing a sort of a mildly risk positive day so far. There isn't really a great deal to drive the markets today in terms of economic announcements. You've got the announcement of the NHB housing market index at 3 o'clock for the States. It's expected to be mildly positive, around about 60. But again, that was basically in line with what we saw last month. And what you do tend to see on the NHB is seems to be in the last few months we've got a trend whereby the actual comes in slightly below estimates, but last month it was actually on the estimates of 60, but just above the estimate of 60 at 60. But that's the expectation here, and to be honest, it's not going to do a great deal, I don't think, for the markets today. I think it's going to be more running off general sort of market macros today, which tend to be sort of relatively positive, don't they? So that takes me quickly to the DAX, which is my chart of the day. Now, what we have seen in the DAX is, over the last few months, is a very sort of up and down, choppy moves. You get these sort of week, maybe 2 weeks of gains and then sharp corrections. It tends to be seen quite consistently, where the market is just turning around on the old key levels. And I say old key levels because 10,120 is again back in play. That was a level that capped in March. Captain May, mildly supportive, and then broke to the downside. And I would say that we're now back into this area of resistance. We're now between 10,120 and also the fib levels, which have played such a strong sort of aspect of such an important aspect of the DAX in the last sort of year or so, really. So you're now into a resistance band, and you hit 10,120. You actually rallied to 10,160 this morning. 10,160 was the high before coming off again, and I just think that this is around about where we're going to start to see the resistance coming in, because you've got the RSI back towards 60 again. 60 has tended to be where the market has topped out. Yes, you had that strong run higher in April, but other than that, we've basically been seeing the market topping out around 60 on the RSI. MACD lines more sort of correctively configured, really, and just unwinding back towards neutral. Stochastics are still positive, but are beginning to roll over as well. So I just think that this is the point at which you're going to be looking for the next sell signal. And today we've had that rally high of 10,160. It's actually sort of rejected that move and fallen away. Sorry, excuse me. And fallen away. So you'd be looking out for your next sort of sell signal, and you'd probably be looking out for tests of tests of support, really, because look at these hourly momentum indicators. RSI falling away, arguably a bearish divergence. MACD lines already falling away. you'd sort of be looking out for this initial support 9987, which was Friday's reaction low. I think a break below that would be certainly a negative move, and then confirmed of a really strong near-term technical sell signal below 9922. But just for now, this candle is just rolling off the top and just starting to threaten a little bit to the downside. And it'll be interesting to see, with this sort of declining momentum that we're seeing on the hourly chart, is whether you start to see the profit takers getting a little bit nervous of this one and starting to come in. Because as I said, on the daily chart, you're now into a position at which you're starting to think that this is going to be your next sort of opportunity to sell. Because as I said, it does tend to be very choppy, very up and down, no real trend. You've got the flat moving averages, and I think it all pretty much sort of suggests that you're going to be coming into a selling area around this sort of 10.120 up towards that fib level at 10.373. So I wish you good luck in your trading today on the DAX, and I will speak to you later. Thank you.